Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Alimentation Couche-Tard, the operator of Circle K and Canada's most valuable retailer, making a proposal to take over the much larger rival and 7-Eleven owner 7 & I Holdings. A merger would create the world's top operator of roughly 100,000 convenience stores. Shares of 7 & I Holdings jumped 23% today. That company, by the way, was valued at the equivalent of $31 billion before news of the offer emerged. Let's get to it with Crystal C., Bloomberg News deals reporter. She joins us from Switzerland. Crystal, I want to talk about this deal in particular, but then branch out and talk about the deal space in particular, especially what happened in July and what that could suggest for deals moving forward. What do we know about this particular deal? Because Couche-Tard has not given many details.
Not much detail. We don't know the price. So far, we know that Couche-Tard has submitted a friendly offer to 7 & I. It's not a hostile takeover. It is going to be a negotiated transaction. If anything were to come to any kind of fruition, I guess the company can hash out kind of management roles as well as how units are going to be operated. And speaking of, just M&A transaction, like you said, since July, it's been a flurry of deal making, and which is a very interesting timing as everybody looks at the end of the year. There's an election looming, but still there are a lot of deals that seems to be cooking up.
So much for bankers and lawyers being on vacation right now. You mentioned the idea of a friendly takeover versus a hostile takeover. Just remind our audience the difference between the two and what we should be watching for in a friendly type of deal.
Yeah, so I think in a friendly transaction, you just get to have a more, a lot more happen behind the scene. Whereas in a hostile takeover, a company just put in an offer, and a lot of that would play out in public statements. The target would say, okay, this isn't a good enough offer, or we're evaluating this, evaluating that. But if this were to go as planned, like how Couche-Tard and 7 & I had described, it would most likely be mostly played out behind the scene, which is difficult for us, but great for the companies in some way.
So, Crystal, this merger would create the world's top operator of roughly 100,000 convenience stores. I'm wondering where across the world are these stores spread out? Obviously, we know 7-Eleven is in the U.S., but give us a little bit more of a sense of just how global this deal is.
So 7 & I is trading in Tokyo, and a lot of its operation is in Tokyo. A 7-Eleven brand was started in Texas, but actually it had a global footprint now. And if you remember, 7 & I also had had made a takeover approach a couple of years ago to buy the Speedway convenience store gas stations in the U.S. So they actually have a really good footprint in the U.S., across Asia, and parts of Europe. Couche-Tard, it's mostly within Europe and in Canada. So you're actually going to see a very global portfolio of convenience store, which is actually a very hot space at the moment. There are a couple of other players across Europe, across the US, that could all be primed for takeover, especially if this deal were to happen.
Is the deal going to happen, though? I mean, some analysts are saying this actually might not end up, coming to fruition. The deal might not be signed.
So a lot of people who have followed this space for a while will remember that this is actually not the first attempt. There have been a couple of times where these two companies flirted with the idea of merging with each other. And not just that, like if you name all the possible combination, there are companies like EG Group, Parkland in Canada. I mean, every possible combination that could be explored had been explored at some point. And the biggest thing here is antitrust. Like I said, it's such a global operation. You're actually going to need regulatory approval in many regions. And given how much scrutiny you could face, especially in US and Europe, this could well be a very challenging deal. Even if it gets signed, it may not take shape as the way that they're proposing right now. A lot of these deals end up having very, very big divestiture plans where a third player would come in and like buy up some of the stores that are not approved because of antitrust reason. So this is a long process. Even if this deal gets signed, doesn't mean that ends there.
On the 7 & I side, why has it been under pressure from activist fund Value Act Capital Management? And secondly, how do you think that activist investor is thinking about this proposal?
So we haven't heard from Value Act. Value Act actually ran a proxy campaign in Japan last year at 7 & I, and it was unsuccessful in adding board members to 7 & I. So Japan is a very unique market, as we know. And a lot of the retail investors, a lot of the stocks are retail investors, and then the retail investors usually tend to support the management. So in order to advocate change in Japan, it's actually really difficult, and you have to be very culturally sensitive to do so. In this particular instance, Value Act wasn't able to make that change. But then the argument that they had that the company underperformed, that a company could see a higher stock price, that I guess exactly is what Couche-Tard is seeing as well. With the yen being depreciated, that is a really good opportunity, a really good timing for Couche-Tard to make a move, or for anyone else. So we should bear in mind that, again, there are so many players in this space. Everybody has looked at everyone else. So anything could happen. Maybe like another buyer could emerge, but we should expect Value Act to have some sort of comment at some point, given they still have a stake in the company.
Okay, Crystal, speaking of timing, what has been happening when it comes to timing in the deal space of late? I mean, it was just a week ago that we were talking about Mars agreeing to buy Kellanova. We have Boeing buying parts supplier Spirit Aerosystems. We have Bosch's acquisition of $8 billion in air conditioning assets. What's going on when it comes to where we are in the cycle and what you're seeing with deals?
Yeah, a lot of the deal makers have commented that this is an unusually busy summer. Since July, we've seen a flurry of deal making. And like I said, it's really unusual. First of all, for someone to be this busy, a lot of the deal makers themselves or company executives tend to take time off, and not this year. I guess partly is to do with that the election in the back end of the year, it's really going to put a hurdle on a lot of deals. You don't really want to be caught in any sort of market cycle. So if you were to do a deal this year, you either get it done before September, before it gets too close to the election, or you wait till 2025. So this could be the last stretch of deals that we're seeing. And as you see, there are quite a few consumer retail transactions like Kellanova, like this one. It could also indicate that there are arguments to be made about the consumer strength. Potentially, it's that size and scale really does matter as a consumer retail company at this point more than anything else.
Yeah, talk a little bit more about what kind of macro signals we can learn from this uptick in deal activity. Does that mean that the consumer is weakening if these companies have to merge together?
Yeah, a lot of companies have actually passed on a lot of costs in the past couple of years to consumer just by raising prices. And that's where the growth has been coming from. And a lot of that companies have felt that they have kind of maxed out on passing that cost to consumers. And for now, if you were to generate extra growth, you kind of have to be in the domain of deal making, in organic growth, by buying someone else, by getting bigger, and by going into regions and like geography that you're not already in. So that's another reason why some of these deals, mainly a lot of them are geographic. This one in particular is a geographic expansion. Kellanova is a portfolio expansion where Mars wanted to diversify into savory snacks versus just like sweet confectionaries. So again, it's a consumer play, but then also the really interesting thing, perhaps with Kellanova, and not so much here, is that the effect of Ozempic is on everyone's mind as well.
Interesting.
So if you see that everyone is expecting Ozempic in a consumer world, everyone is expecting Ozempic to have some sort of effect in the not so healthy category of food. And if you think about convenience store is also selling mostly confectionaries, potato chips. And if you expect in the long run Ozempic to have a bigger effect, you may as well have a bigger market share so that you can like withstand that weather a little bit better.
Hey, Crystal, before we let you go, just about 45 seconds left. Talk to us just a little bit about the idea of what your sources are telling you moving forward, given that we could see a rate cut in September, maybe 2 more rate cuts before the end of the year. Do we expect deal activity to increase when the Fed does lower rates?
Yeah, I think the interest rate has been a huge topic in the past 9 months. And then for now, I think most of the discussions has been whether we're getting too close to the election. Interest rate still remains a topic, but then it's not as important perhaps as something like an antitrust when you do a big transformative acquisition like this one.
All right. A big thank you to Crystal C., Bloomberg News deals reporter. She joins us from Switzerland. Check out her stories on the Bloomberg terminal and, of course, also at Bloomberg.com.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's talk sports because NFL players are grappling with a complex new reality. They're aware of the money being bet on every catch, run, touchdown, and let's be honest, more. And generally, it's good for the leagues and thus their own financial health. But they're also, if you can even say this about a professional football player, scared on a personal level and generally freaked out about running afoul of league rules. Those words from Jason Kelly, who writes in Bloomberg Businessweek all about the relationship that current and former NFL players have with the league embracing sports betting. Jason is chief correspondent for Bloomberg Originals. His story is featured in the forthcoming issue of the magazine, but read it now on the Bloomberg terminal and at Bloomberg.com/Businessweek. A football player being scared.
Yeah, wild, right?
Why? I mean, there's signs apparently everywhere, as you write, no betting allowed in their locker rooms when they travel. They can't do. What are they scared about specifically?
I think what they're worried about a couple things. One is that the punishment for running afoul of the rules is harsh. Calvin Ridley is the player that everybody points to. He was playing for the Atlanta Falcons. He was injured. He placed a bet on football while he was not playing and was suspended indefinitely, a suspension that ultimately lasted a year. He got cut from the Falcons. He's now back in the league, but the swiftness and the severity of the punishment really made these guys sit up and think. The other is that because there's now so much money on the line, there are a lot of people who are, shall we say, expressing their opinions to them on social media, in person, about when they don't perform the way that maybe someone bet they would.
Never read the replies, at least.
Yes. Stay away from the comments.
The Washington Commanders running back, I think, shares some good good anecdotes about what people say to him online.
Yeah, absolutely. So Austin Eckler, he is on the cover of the upcoming edition of Bloomberg Businessweek. He is a very, well-decorated running back for the Washington Commanders, as you say. He's a really interesting case in part because a few years ago, he saw a lot of this coming when it came to fantasy football, which was sort of the way that this all started, at least in the United States, where, you draft a team. That a lot of this is actually going on right now. People are getting together. My son was drafting his team with his buddies till 1 a.m. last night. And, it's some friendly wagers that go on. Austin saw that. He actually hosted his own podcast to sort of lean into it. So he started to understand the economics here. Fantasy is a different world, though, because what players can do there is actually spelled out pretty well. There's a cap. They can't make more than $250 on it. So it's really just for fun. But what it did open up for him is this notion of, wow, people are really paying attention in an entirely different way. And that part actually is good for them, as you said in the intro.
Mm-hmm. Yeah, so why is it good? Like, what good is it doing for the players that now sports betting is legal in more than 30 states in the U.S.?
It's a great question. And the issue for them is that it's essentially the rising tide. So it helps them in a couple ways. One is that the NFL, along with other leagues, has done these very lucrative partnerships with the sports books, with DraftKings and FanDuel and others. And so all of that revenue is ultimately shared with the players. It sort of goes down, collective bargaining sort of dictates that that's happening. So that's one. The second is you just have more people paying attention to the games in a different way. So take Austin Eckler, again, as an example. There are a lot of people who sort of only slightly care who he's playing for. They are either picking him for fantasy or they're betting on his individual performance. So he was playing for the Los Angeles Chargers. Now he's playing for the Washington Commanders. You have a lot of people tuning into games that they might not otherwise be interested in, because if you live in New York, do you really care about the Dallas Green Bay game if you're a fan?
I mean, you do if you put money on it.
Exactly. And so that's the point, is that you're paying attention, you're watching. TV revenue goes up, and revenue accrues to everybody.
Hey, just how strict are these rules for the players? Because one anecdote that one of the players that you and the team profiled in the piece talks about not even being able to play ping pong
right.
at an away game, like, you know, when they're just hanging out in the locker room and betting $5 on it.
Exactly. So this was a really interesting. I did not know this until we worked on this story. So the rules about betting. So you cannot bet, if you're an NFL player, you cannot bet full stop on the NFL, certainly your own team, at all if you're an active player. Like, can't go there. Mm-hmm. You can bet on other sports, except if you are in a team facility or in any way conducting team business. And so the example that was given was, if you're on essentially a business trip, so you play for the Washington Commanders, you're at an away game in Atlanta, and you're sitting in the Ritz-Carlton, which is probably where you're staying. You're on your bed and you're like, oh, a ping pong game. Like, I just saw this online. Like, I'm going to bet $5 against the rules. You can get fined. You can get suspended. It is absolutely against the rules. So if you're if you're on a team bus, can't bet. So it is very strict. And the reason it's strict is because the NFL has to protect the integrity of the game. Because if there's any sense that the games are fixed or they're in any way compromised, the entire thing falls apart. This is the most lucrative league in the entire world.
What did you learn about the impact on the states in which sports betting is now legalized?
Yeah.
The kinds of tax revenues that they're now generating from this activity?
So revenues certainly are up for the states, and it's one of the reasons, this is a tale as old as time. Lotteries, sports betting, all of that, a lot of the revenue accrues to the states. My colleague Rehan Harmansi, she writes extensively in this cover package about the social impact on this, and I will say it's one thing that the players that I interviewed talked a lot about. They think a lot about this because they have the wherewithal and they have a lot of rules around them to stay away from it, but they say to each other and they say to anyone who will listen, don't do it. Like, even though it ultimately accrues to them, they have real reservations about this as a practice.
Okay, so let's just talk about that very briefly. The idea of pushback that we could get to sort of the watershed moment a few years ago where we saw the ability of states on their own to approve sports betting.
Yeah.
Are we going to start seeing pushback?
It is the question. I think the question is going to become, do regulators, do lawmakers, do other people weigh the cost-benefit analysis of the money coming in versus the social impact? There are, studies that point to higher levels of personal bankruptcies. People can really get in trouble. They can get addicted to sports gambling. It is very, very easy to pull up your phone and place a bet, especially where it's legal.
Hey, Jason, on a different subject, just 30 seconds. The
Yeah.
Power Players Summit happening here in New York City in just a couple of weeks. Tickets available still?
Yep, tickets available. It's going to be a great program here in the building in New York City, September 5th, right around the U.S. Open, which I know you're going to be involved in, not playing, but covering.
Definitely
maybe you're playing. I don't know.
Watching
who
and
knows?
covering.
Who's to say? So we're going to have a lot of really interesting folks on hand. Steve Paliuca, who you know well, owner of the Boston Celtics, is one of the headliners. So more to come. Check it out on our website.
All right, we're looking forward to that. Still waiting on my wild card entry into the U.S. Open, by the way.
I'm pulling for you.
All right, thanks. I appreciate that. Jason Kelly, he's chief correspondent for Bloomberg Originals. Check out his story. It's in the forthcoming issue of Businessweek Magazine. You can read it now, though, on the Bloomberg terminal and at bloomberg.com/businessweek.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, U.S. Secretary of State Antony Blinken said Israeli Prime Minister Benjamin Netanyahu has accepted a ceasefire proposal to halt the war in Gaza, and the next step is for Hamas to say yes, as the Biden administration looked to bring an end to the 10-month conflict at last. Blinken is on his 9th trip to the region since Hamas attacked southern Israel back on October 7th and called the proposed accord, quote, a bridging agreement, and acknowledged that not everything is spelled out in detail, but it does build on a proposal that President Joe Biden put forward in late May, which both sides had balked at. The reason I'm talking about this is because we are going right to Tel Aviv to speak with Avi Hasson, who's CEO of Startup Nation Central. It's a nonprofit that works, in its own words, to promote the Israeli innovation ecosystem around the world. Avi's also Israel's former chief scientist of the Ministry of Economy and the founding chairman of the Israel Innovation Authority. Avi, I want to get your comments on the latest out of that we just heard from Antony Blinken, but also taking a step back, how things have shifted in your role post October 7th. So first on the breaking news.
Yeah, so obviously, we'll look forward hopefully to have a success of these negotiations that brings the hostages home and really brings us closer to a ceasefire. So we're truly grateful for the involvement of the U.S. administration and the support that it has been showing. And hopefully this pressure will also work well on the other side, which still has to concede to the proposed deal. If that happens, then, we will start thinking about the day after. There's a lot to do. And innovation is certainly going to play a big part also in that recovery.
How has Israel's economy responded over the last few months to the threat of a potential attack from Hamas?
Yeah, so we're very lucky, Emily, that the Israeli economy actually came into this war in a very, very strong position. If we look into the macro indicator, in the past 5 years or so, we've seen a tremendous growth of Israel's GDP, a very, very low debt to GDP compared to other countries, very low unemployment, very managed inflation, basically thanks to the strength of the high-tech sector. And remarkably, when we look on the macro indicator 10 months after the horrible day of October 7th, while we do see drop and some slowness in the markets, the resilience of the Israeli economy as a whole, and specifically of the high-tech sector, has been astounding. And by the way, Israel's high-tech is the country's business plan. 20% of our GDP comes from high-tech.
So, Avi, we get great. One of the things that I love about our program is we get great feedback and questions from members of our audience who are listening and watching around the world. Our producer is sending me a question from one of the members of our audience asking a really important one, I think. Have you seen the business community put pressure on the Israeli government to end the war?
I think, war is not good for business. It adds uncertainty, not to talk about the direct impact of having, at the height, it was about 10% of the high-tech workforce that had been enlisted to active reserve duty. You add to that, the problems with air travel into Israel and so on, and it's obvious that, certainly from an economic point of view as well as from a humanitarian one, ending this war and moving into, back to business in many aspects is something that the business community aspires. And as such, yes, of course, they've been vocal with the government to push that forward. And unfortunately, Tim, for war, you don't necessarily need both sides participating. So both sides need to agree really on, finishing this round of conflict and moving forward. I have to say that if I need to choose one word that will characterize what the Israeli business community and high-tech specifically has shown, it will be resilience. Because if we just look at the numbers and just look at the output coming out of that sector, the over $5 billion raised by Israeli startups in the first half of 2024, making it very, very similar to the U.S. trends. Really putting that Israeli factor to a minimum, showing that resilience, showing that spirit, which in many aspects characterize the Israeli innovators, and is probably the main reason why 450 multinational companies have chosen to set up their innovation centers in here and have been growing throughout these 6 months, even due to the war taking place.
Yeah, that was really interesting. I'll repeat that stat because you had sent it over to us in your notes. Private funding in the first half of 2024 saw a 31% increase amounting to $5.1 billion US dollars. Talk a little bit about where that funding is going, what kinds of startups specifically are seeing the most investment.
Yes, Israel is a home to over 7,500 startups who really lead the world in terms of startups, entrepreneurs, venture firms. We're called the Startup Nation for a reason. If we try to look into the sectors that have drawn most of the investment in the first half of 2024, cybersecurity certainly stands out. And when it comes to cybersecurity, Israel is truly a superpower, punching way above our weights. There's a lot happening in the cybersecurity sector in the world. And most of what we've seen in Israel is just a reflection of that. There's an arms race of the big players within cybersecurity, the Palo Altos, the CrowdStrikes, the Zscalers, the Ciscos, and the likes. That has caused a lot of M&A to take place. And if you try to look for innovation, certainly in this specific sector, Israel is one of the places where you will be doing that. And this is why we saw a lot of investment flowing in. To mention just one company, Wiz, W-I-Z, raised $1 billion in a signal round, still a private company, but certainly one that is doing a lot of great things. But we've seen over 320 rounds as part of that number that you mentioned, and not just in cyber. So Israel really has a diversified ecosystem. And at the end of the day, what people are looking for, when I talk to either the CEOs of the large companies, the Jensen Huang, the Pat Gelsingers, the Safakats, it's mostly about the spirit and the culture. There are a lot of places in the world where innovation takes place, but we do it slightly different. Sometimes we like to call it impatient innovation, and I know that patience is a virtue, and Israelis, I guess, are notoriously an impatient bunch of people. But if you think about it, when it comes to innovation and the problems we all, societies and economies, are coping with, we need a little bit of that healthy disregard for protocol. We need a little bit of that boldness, scrappiness, just jumping into action. That's very Israeli. We've seen that in the war. I think that's one of the reasons why civil society and private sector have self-mobilized, sometimes to, create solutions that, are either complementary to the government or instead of the government. And it's that spirit of innovation that attracts the world's best investors and really the CEOs of the greatest companies to both invest in Israeli companies and acquire Israeli companies. So we've seen a lot of M&A activity in the first 6 months, which again, if you think about it, during wartime is not intuitive.
Avi, I know that Israel's famous for certain startups, including Waze that Google bought years ago, Mobileye and Intel, of course, but also cybersecurity, as you mentioned. Help us move this forward a little bit, just in the last 45 seconds that we have with you. What's sort of the next frontier of innovation that you see emerging from Israel?
Certainly when we see the next upcoming sectors, they really refer to the global challenges that we all cope with, as human beings. So there are 3 times more health tech startups in Israel than cybersecurity startups in Israel. There are about 1,000 startups dealing with sustainability, energy, climate, and so on. And if you think about the utility technology, AI is driving all of this change. So either as platform horizontal solutions or applied in vertical solutions from agri-tech and food tech to health that we mentioned before, AI is driving this forward. And Israel, is right there at the forward, taking advantage of a well-developed ecosystem that has matured in the past 30 years to have that fountain of innovation continuing regardless of crisis. And I'm pretty optimistic that after we finish this war, hopefully sooner rather than later, we will see a baby boom or startup boom, actually, bringing, both innovation that was relevant and put into test during this conflict, but also just bold new ideas taken by Israel's entrepreneurs into the world.
Avi, we got to leave it there. Avi, CEO of Startup Nation Central in Tel Aviv.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
And it's time for the drive to the close. We're joined today with Dan Skelly, head of Wealth Management Research and Strategy Team at Morgan Stanley. He joins us on Zoom from New York City. Dan, we've been talking all day about how this is the 8th straight day of gains for the S&P 500, the largest or the biggest winning streak of 2024. What do you think is driving this rebound here in the equity market?
Thanks for having me, Emily. And look, I think the last week of gains, following what had been obviously a week or so or a couple of weeks of weakness, reminds me that the economy and company fundamentals tend to move more like a cruise liner, whereas stock prices tend to zip around more like a speedboat. And frankly, I think when you think about that setup related to the August period where liquidity tends to wane anyway, the unwind of the Japanese yen carry train, as we all know, has been talked about extensively. I think you just ran into a situation where market liquidity conditions, technicals, and some rotation out of the prior leadership into new pockets of the market were all part and parcel related to what drove the market.
What do you say to those folks out there, Dan, who say, all right, I want to buy stocks, I want to buy large cap equities, but I'm a little concerned that the S&P 500 is looking a little frothy right now?
So I've been listening to people describe the S&P as frothy for a year. And I think, frankly, when you think about what had driven that valuation premium, as you know, it was the third of the market that was technology-based that got caught up with the AI excitement, but frankly and quite practically had very strong earnings revisions. And so, look, what I would say is, given the reality around the Fed cutting amid a positive economy has started to take hold more ingrained in investors' minds, given the S&P 493 earnings are improving, and it's not just a Magnificent Seven earnings story anymore, and given that the phase of the suspension of disbelief around AI return and the capital spending, tremendous capital spending that's gone into that particular theme is now starting to elicit more scrutiny from the markets. I think, to your question, the opportunity set outside of the Magnificent Seven, outside of the index level, is about as strong as it has been over the last year.
So where exactly are you seeing those opportunities? Is it, going smaller down the market cap spectrum, or just broadening out on a sector level, but still remaining in large cap?
So that's an excellent question. I would say it's more of the latter. So when you look at the vicious rally in small caps a month ago, we were actually saying to fade that, because even though rates are going to come down, per my comments earlier, the resting heart rate of inflation and the cost of capital in this cycle will simply be higher than it was versus the post-08 cycle. Thus, you need better financially positioned equity exposure in large cap versus small. And second, while none of us really know ultimately when AI is going to start to show up in large cap companies' productivity and earnings streams, what we, I think, all could argue is that it's more likely than not that quality large cap names with cash flow will participate in the investment cycle around AI, whereas small caps that don't have that same cash flow likely will not. So to answer your question, we are encouraging investors today to look outside of the Magnificent Seven into more large cap quality value ideas, like financials, like industrials, in some cases like healthcare. We also, Emily, are telling investors and clients to look outside the US. And I'll give a nod to Lisa Shallett, our CIO, a week ago, who said to buy Japan after what had been obviously a fairly volatile period for Japanese stocks. And that call has proven to be fairly prescient so far.
Hey, Dan, Democratic National Convention kicks off. Politics is front and center for us for the next 80 days or so. How are you thinking about political risk when it comes to your portfolio, and what you're thinking about the composition, not just of who's in the White House come January 2025, but who are in the halls of Congress too?
So I joked with John and Lisa when I was on your peers' studio, TV studio about 6 weeks ago that we're basically getting that question on the hour. So we're pretty versed in our response. But look, it's all jokes aside. It always plays a factor in markets in the short run, right? Whether or not certain policies get enacted or sentiment around certain politicians gets reflected in markets, it has a short run effect. Having said that, looking at decades and decades of data, I think it's quite evident that as we always say, the business cycle and the profit cycle oftentimes tends to supersede any 1 year, 1 month political impact. So having said all of that, you asked clearly an important question around how are we thinking about this election? And look, what we would argue is if you do see a potential red sweep where the odds were frankly higher a month ago than they are today, given changes in the Democratic ticket lineup. But if you were to see that red sweep, that's where we see the widest band of outcomes in terms of maybe some positives related to deregulation, but maybe some uncertainties related to tariff, trade, and immigration policy, which could disrupt the Goldilocks disinflation thesis. And so that's where you see the widest bands of market and economic impact. On the other hand, in the blue sweep scenario, we liken that to, frankly, more of the same, more of the status quo. Okay. So that's how we are starting to think tactically about those two different outcomes. Very last thing I would say is I think it's been particularly notable that long rates have been coming down ever since the June 27th debate outcome. And as we all know, following that outcome, the red sweep odds went up, but rates went down. So quite obviously, the markets are paying attention to something else, which is a little bit of mixed economic data, but more certainty around the path of disinflation. So I have found that rates vis-a-vis politics and betting markets to be fairly notable.
All right, well, we're going to have to get you back on before November for an update on how things may have shifted, at least according to polling. Dan Skelly, love it when you join us, head of wealth management research and strategy team over at Morgan Stanley, joining us from New York City.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.